broke out my 15-second chart today. Used to trade off the 15-second chart a lot. The reason I brought it back was because of the price action lately has just been so choppy in the morning. So having a smaller time frame can possibly find some more trades when things are moving slow. One thing I got to watch out for with the 15-second chart is not to get caught up in the super short time frame here. Always have to have the bigger picture in mind. Got my 1 minute, got the 5 minute, got the 15 minute, 60 minute. But I basically have all the signals that I have on the 1 minute over here on the 15 second as well. Did all right today, a little over 900, 79%. Got caught trying to go long in a couple of bad places. All the short trades worked great. Just had some HAMA Band return signals, TDI signal, MFI oversold signal. We broke out of the Bollinger Band, came back in, crossed above the 20. This setup's happened a bunch today. Had a nice move up. Here's the 5 minute chart. Here's the first candle of the New York Open. Ton of negative delta, ton of negative volume, below VWAP. Actually did not even sign in today until after the 10 o'clock news, which is rare. I hardly ever miss the New York Open. Dropped about 50 points in 15 minutes there. Right after the news, for about 5 minutes, we got a little push up. The news came in quote unquote bad, which has been good for the markets. But then Apple shares have been tanking today. Looks like it brought the rest of the market down with it. Next 5 minute candle, we just had a ton of negative delta on both the NQ and the ES. And it drifted lower the rest of the morning. So we had some pretty good signals earlier in the morning when I was not trading. And then we got into this choppy mess. And this is what I want to talk about today. This is when I was trading, but somehow still came out on top with 900 bucks. So if you're just relying on these signals, you might be in for a world of pain right there. But as you know, if you've watched any of my other videos, you know that I'm not just taking these signals when they print just because they print, factoring in a lot of different things. For instance, we are below the 20 SMA this whole way down, below VWAP. Trend's been down all day. Not super interested in buying the lows a day here. The other really easy way to look at this is another simple technique that I've talked about many times in the past, waiting for confirmation. So when one of these signals prints, you want to wait for another candle to break out above the previous candle, or possibly even close above the previous candle, but at least break above it by a decent amount of ticks. This signal prints here. Next candle does not break above. Same with this signal. This candle does not break above. So both of these signals would be invalidated and not taken. This signal, trend to the downside, we do break below and we do come down 7 or 8 points there. However, I've got my candle still painting green from the moving average crossover, and we just had a bunch of green signals. So I might want to wait till there's a little bit more confluence. There's no major delta or anything coming through right there. Nothing to make me want to just jump right in. This wave signal to the upside, we do break above. We tap the 20 SMA for 6 points. This delta signal to the downside, we do not break below in the next candle, so that signal is invalidated. We get a double signal here, but the next candle does not break above, so that signal is invalidated. Here we have a delta signal to the downside. We do break below. Have a nice 18-point drop right there. We get another signal and a ton of delta coming in, but this next candle does not close below. So until price continues lower, this could just be a sign of exhaustion with all this delta coming in. And we are already at the lows of the day so far here. This trend signal is going right into the 20, not breaking above. And the next two candles did not break above this. This trend signal to the downside, we never break any lower. After this signal, we get a little break to the upside, coming up really close to the upper Bollinger Band. Bollinger Bands are squeezing tighter and tighter and tighter and tighter. You see there's a wider distance here, and they start narrowing and narrowing and narrowing. When that happens, you can usually expect a breakout in one direction or the other. This signal, we get break below, get a nice 10-point drop there, come back in the Bollinger Bands, get a couple signals, our moving average crossover, candles turn green, we finally break above the 20 here, and we pop up over 20 points right there. So using that simple confirmation technique can keep you from making bad decisions in choppy markets. You know, it doesn't always look nice and clean like this. This is pre-market. I was just saying yesterday I gotta get up and trade pre-market. Pre-market's been looking very clean, easier to trade. I mean, I don't need to go over all this. You can see just with a quick glance that this was way easier to trade, although there's not that much delta coming through it this time of day, so I'd probably want to change the parameters for the volume delta indicator if I was focusing on trading pre-market. That way I could see when strong levels of delta were coming through a little bit easier. The delta amounts in the pre-market are just a little bit less, unless there's a big news announcement or something like that. So there's some tips and tricks to stay out of a choppy market and the importance of waiting for confirmation. I hope you got some good ideas for your own trading. Thanks for watching. Have a great day.